lesson today, we're going to continue from our last lesson where we did the calculations for the total provision for doubtful debts, and we also did the calculations for the changes from year to year for the provision for doubtful debts. We also identified which side of the T account it will go on in terms of whether it will go on a credit side or whether it will go on the debit side. Every time there's an increase in the provision for doubtful debts, then it is credited. And when there's a decrease, it is debited. So today's lesson is going to be where we actually go into the account and we place the transactions within the account. So here we have, this is the heading, Provision for Doubtful Debts, T account, and you would find the format for the T account, or an example of the format for the T account on page 246. So we start with a little reminder. The provision for doubtful debts is a contra asset which reduces the accounts receivable in the balance sheet so that the assets are not overstated, as stated in the prudence concept, or we also know it as conservatism. Okay, so we had already stated and we emphasized that profits are not to be overstated, and that is why we have to write off our bad debts, and we have to also put any provision for bad debts like increases and decreases, we have to put it into the income statement. So we emphasize that much so that it can be matched, and also so that profits are not overstated. Now we're going to also emphasize the fact that a provision is created and it has to go into the balance sheet to reduce the amount of the receivables so that we do not overstate our receivables. People know fully that there are certain debtors or receivables that may not in the future be able to repay the amount that they owe us. So because of that, if they saw that you had $50,000 in a receivables, that is an asset. Whoa, that is the amount of money that they expect for us to actually receive in the future. But we know, because of past experiences and stuff like that, the probabilities, we know that a certain percentage may not be able to pay that $50,000 or part of that $50,000. So in actuality, if we do not tell people that, they are going to think that we have assets of $50,000, which would be overstated, because in reality, we have possible future bad debts. So we disclose this in the form of a provision for bad debts, and that reduces the receivables in the balance sheet, and it shows that the actual receivables that we believe the probability we are going to receive, say for example the provision is $5,000, let's use an easy number, $45,000 is therefore our assets in the form of receivables. And we have stated that, we have shown the $50,000 is our receivables, but we also show that there's a probability, so there's a provision that of $5,000 that says that there is a probability we're not going to get the $5,000 of that asset, and therefore the amount that we are expecting to get may be $45,000. So if in reality we get more, so say we do collect all of that $5,000, great. But we have informed our users of the possibility, the probability, and that is what we need to do as accountants. So after that really long explanation there, just to let you know once again why we do what we do, we're saying that, of course, in summary, the receivables, it is necessary for us to reduce the receivables in the balance sheet in the form of a provision for doubtful debts, which is an estimate of the possible future bad debts. So that is what we are going to do. But we are not going into the balance sheet as yet. We're not even going into the income statement. In the accounting cycle, we have our journal, and then we have our ledgers or T accounts. So we are going to do today the provision for bad debts T account. And the T account as a contra asset. Whenever there's an increase in the provision for bad debts or doubtful debts, we credit it or put it on the credit side. And whenever there is a decrease in the provision for doubtful debts as a contra asset, we put it on the debit side. Increase, credit, decrease, debit. So because of that, the contra asset accounts which provision for depreciation is and which provision for doubtful debts, which we are now going to do. That is a contra asset account that shows both the income statement figure and the balance sheet figure. So here we have an example format. You have your year. On the credit side, in this case, income statement, the amount. This would show that there is an increase. Remember what we said? An increase would go on the credit side. For your first year, it will always be a credit because you're increasing from 0 to whatever the amount of your new provision is or the provision that has been created. Balance brought down would be on the credit side because a contra asset, which reduces an asset, credit account, so your balance brought down will be on the credit side. Next year, basically, income statement. This shows there was an increase in the provision for bad debts. Balance brought down, but look at it just here. Notice income statement is not on the credit side. It is over here on the debit side. What does that tell us? Basically, it tells us that there was a decrease in the provision for doubtful debts from the previous year. So this is what we are going to show with an example, that unlike the provision for depreciation, if you go back to your provision for depreciation, you always had on your debit side, balance carry down, balance carry down, balance carry down. And on the credit side, you always had income statement, balance brought down, income statement, balance brought down, income statement, balance brought down. But that was for provision for depreciation because there was always an increase in depreciation. Always. But for provision for bad debts, because there can be an increase and there can be a decrease, then you're going to have that it can go on both sides. So for the provision for doubtful debts, you will always have on your debit side, balance carry down, balance carry down, balance carry down. And you will always have on your credit side, balance brought down, balance brought down, balance brought down. What you will have changing, depending on whether it's an increase or decrease, would be your income statement. So for 2 years, you had an increase. The first year, always an increase. Second year, you also had an increase. Third year, however, you had a decrease in the provision. So we put it on the debit side. Okay? So what's the best way that we can actually reinforce this is by doing an example. And what we are going to do is the activity 6.15 in your workbooks, page 247, where first thing that we're going to do is the calculation, which we had done in the last class and which you were supposed to go away and do. We're going to do that now, and then we're going to put the information into the provision for doubtful debts account so that you can see it. So what you have for the first year, 2012, you have your debtors, 10,300. We have no bad debts to write off. So your provision, which they stated is 5% of debtors, therefore would be 5%, 10,300, and that will give you $515. $515, as we said before, every time it's the first year, which 2012, we are now creating our provision. That means that it's increasing from 0 to 515, so that will be an increase. And as an increase, it will go on the credit side of the provision for bad debts account. So we're going to do 2013 now. As we said, the provision is 5% of debtors, so it will be 5% of the 12,700, and that will give you $635. So you have $635. That is an increase from the 515. And how much did it increase by? 120. So there we have an increase. So therefore, in your account, you will go to the credit side. Well, how we have it here, we are going to state that after. So we're just going to do the calculation, the changes for now. So 2014, let's go back, it's 5% of 11,400, which gives you 570. 570, it was 635 before, so what you have is a decrease in the provision. How much did it decrease by? $65. So decrease 65. 2015, it is 530 because 5% of 10,600 is $530. So which means if it was 570 before, 530 now, there was a decrease of $40. So now we're going to say what side of the account it goes on. Extremely easy. Once you see there was an increase, it will be credit. Once you see there was a decrease, it will be debit. So the first one will be obviously credit side. Second one will be debit side. And once we have a decrease again, it will be debit side. So these are our calculations. These are the answers that we should have gotten. And now we are going to take it into the account, right? Which is a contra asset. So reminder, once it increases, credit side, once it decreases, debit side, which we have noted here. So all we are going to do now is we're going to follow what we have already written down. So the first thing you have to do for any account, you put the name of the business, and it's D. Daniel. And which account are we doing? We are doing the provision for bad debts or provision for doubtful debts. So we are doing the provision for bad debts or doubtful debts. Both are the same thing. And we're going to put the first year, which is 2012, and we are looking at year 2012. There is no balance because this is the first year that we are creating the provision. So we will go straight to what goes in the income statement. There was an increase. So that means that we're going on the credit side. And as we go on the credit side, 31st of December, income statement. And how much was our increase? $515. And that's it for putting in that transaction. Okay, so we move on to the next step. Next step is the balance. Always have the balance carried down on the debit side. In this case, you can easily see there's nothing on the debit side, so we have to put it on the debit side. 31st of December, balance carried down. How much it is? $515. So you just total up there, you put your two double lines. Since it's only one item on each side, you will just put the double line and open up one time for 2013. So balance brought down goes on the opposite side from the balance carried down, and therefore you're going to have 1st of January, balance brought down, always on the credit side for your provision for doubtful debt. So that is not going to change. Balance brought down, and how much was brought down? $515. So now we're going to go to the income statement amount for 2013. So there we go on that side. What was the increase or decrease? We had another increase, and it increased by 120. So which side are we going on? We are going to go on the credit side. So this side here, we're going on the credit side. End of the year, 31st of December, 120, because that's the increase, 120. You end there. What do we do now? we tally, we total it and stuff, and we put our balance carry down. Our balance carry down always goes on the debit side. So we totaling 515 plus 120, 635. Go on the other side, supposed to have the same amount. Therefore, on the 31st of December, our balance carry down is 635. Now, if you notice, this is just something I like to do. I like to put my balance carry down right above the totals, because it's the last thing that you ever do on any side. Okay, so in this case, it's on our debit side. It's the last thing that we do, so I just like to do this. If you put it on top here, you're not going to get it wrong. But just saying, this is just how I have programmed myself to do it, because I like to do it like that. So what's the next step? You're going to open up one time for the next year, which is 2014. So you have 2014, 1st of January, balance brought down, always on the credit side. And what is our balance? 635. So we are going to go now back to our table to 2014. So we are back to our table. We're looking up there. And what you're seeing here is for 2014, there was a decrease. So which side are we going to go on this time? We are going to go on the debit side. So I'm again going to get to show you now for the first time what it means. I'm sure most of you would get it. We're just going to go through it anyway, okay? So we go on the debit side. This is our debit side, right? So we have our debit side, and you're going to put 31st of December, income statement, and how much did it decrease by? $65. So what goes here? $65. So nice, simple. You have just placed the entry on the side that it's stated. Okay, so let's just go back very quickly, just for anybody who doesn't. We're in 2014. Was there an increase or a decrease? A decrease of $65. So which side are you going to go on? You're going on the debit side. So we go to the debit side, which is here. And since we do these transfers to the income statement at the end of a period, it will be 31st of December. We are transferring it to the income statement. And how much is the decrease? $65. And you've just done that. Easy. Now you continue to do what you are accustomed to doing. What do you do next? You either can just put your balance carry down, which you know is on the debit side, or you can go and tally it and then put it in after. I am going to put what I know is going to come next. 31st of December, on the debit side, your balance carried down. You may not have figured out what the figure for your balance carry down is, so we're going to go through the process. What do you do to find out? You do your totals. The total for the greater side, 635 is the larger number, so your total is going to be 635. The next side is going to be 635, and notice once again, been emphasizing it, it's still supposed to be on the same level because it's the same amount, right? So 635. So therefore, what would your missing figure be? It will be 635 minus 65, which will give you 570. So 570 is your balance carried down. What's the next thing that you're going to do? You're going to go open up for 2015. 1st of January, always on the credit side, balance brought down. And how much is your balance brought down? Look right next to my laser there, 570. So you bring it down over here, 570. And we good. Now we're going to go to 2015. 2015, and what are we looking at? Was there an increase or a decrease? We have another decrease. So which side are we going to go on? We're going to go on the debit side, which is here. End of the year, 31st of December, we're sending it to the income statement. How much was the decrease? $40. So therefore, you have just placed the change or the decrease on the correct side, which is the debit side. Next step, in this case, I decided that I'm going to total first. You have to skip a line because you have to leave space for your balance carry down if you didn't write it down already, okay? So there are your two totals. 570 is your greater amount, so you put 570 on both totals, and therefore your missing figure, your balance carry down, which always goes on the debit side, would therefore be 570 minus $40, and that is $530. Okay, you can do it in any order as long as it ends up looking like this. All right, as long as it ends up looking like this, then we are good. So always make sure that it looks like that, and then you know that you're good. Otherwise, something is definitely wrong. Okay, so are we finished? Even though they only asked us for these years, you know that we have to always go and open up for the following year. So our following year is 2016. You bring your balance down on the 1st of January, balance brought down $530. And now we have it totally completed. There is our provision for doubtful debts, or provision for bad debts as it was known in the past more commonly. This is what we have to look at in terms of how it's supposed to look. Okay, your answer. Want you to note something. As we had said before, the provision for bad debts account records or shows the income statement and balance sheet amounts. It's obvious which one is your income statement, but which figures are your balance sheet figures? Your balances, just like your provision for depreciation, just like in fact all of your assets, liabilities, and the capital account, your balance is the amount that goes in your balance sheet. All right, so note here, look at all your balance carry down. 1, 2, 3, 4 figures, and look over on your table. Do they match? 515, 635, 570, 530. And well, your balance brought down is just the match to your balance carry down, but just in case you don't believe me, 515, 635, 570, and 530. See? So these figures are your total provision for doubtful debts, which is the contra asset that goes into the balance sheet to reduce your receivables figure. So when you go into your balance sheet for 2012, it's going to be your debtors or receivables, 10,300 less 515 provision for doubtful debts. 2013, it will be your 12,700 less your $635. 2014, 11,400 less your 570. And finally, for 2015, when you're doing your balance sheet for 2015, you would have receivables 10,600 less your provision for doubtful debts $530, and that will give you your net receivables figure, and it would show the actual reality of the situation, and we would not be overstating our profits. So we would not be overstating by saying 10,000, 12,700, 11,400, and 10,600, but we would show them that these are the people that owe us money, but there is a chance, and we have estimated that they may not pay us this amount, and therefore in reality our net receivables would be the receivables less the provision for doubtful debts, and you'll be following the prudence concept in that case. Okay, so well, we said it was very obvious about the income statement, but just for you to note it, we already showed how in red This shows the amounts in the balance sheet. As we said, the account also shows the amount that goes for the income statement. On this side, this will show that there were two increases. So in 2012, there was an increase. In 2013, there was an increase in the provision. However, in 2014, because it's on the debit side, on the other side, it is a decrease in the provision by 65, and in 2015 there was another decrease in the provision of $40, which just means that because our estimates are dropping because we have been receiving more of the receivables than we had estimated. So that's a good thing. So what I would like you guys to do is to just take this brief note just to emphasize. So after you can, in your notebooks, or you can just put a reference, put the correct answer and put a reference, the page, and you can write this note underneath it. Provision for bad debts account records or shows the income statement and balance sheet amounts. The total provision for doubtful debts is entered in the balance sheet as a deduction in receivables, while the changes in the provision is entered in the income statement. Right, so you would just pause, write this down in your notebook, strong suggestion, just for it to be emphasized for you. And you can even do this in your notes with the colors and the highlights and stuff like that for your benefit, so that you always know which figures are the balance sheet figures, which figures are the income statement. Just always remember, total provision goes into the balance sheet, whereas changes, which would mean the increase or decrease in the provision, goes into the income statement. And it's very important for you to get that correct, because if you put the total provision in the income statement, you will get it wrong. It will be incorrect. Same thing for your balance sheet. If you put the changes, like you put the 65 rather than the 570 for 2014, for example, you are going to get it wrong. So you need to know that. This is one of the key things to doing the account. And then when we move on to doing the final accounts, which is the income statement and balance sheet, this is the point that you're going to have to remember. Okay? So this is the end of this lesson. We are just doing this one example for you, and you are going to go and do 6.16 and 6.17. In terms, you will already have done the calculations, or should have. If you haven't as yet, when you do it, you can now move on and do the posting to the provision for doubtful debts or bad debts ledger account. Okay? Till next lesson, which will be final accounts.